I put out a video yesterday showing hold-to-maturity losses as a percent of a bank's equity. This scan showed banks in descending order from largest to smallest, but it didn't show the big banks, which was a common critique I got in the comments. So what I have for you all today is hold-to-maturity losses relative to equity for the largest banks in the world. For context, this simply means that these banks have the largest exposure to unbooked losses. As you can see, out of the four big banks, Bank of America is the worst off with losses, as their security losses account for nearly half of their equity. Out of the group, JP Morgan is in the best spot with losses only accounting for 12% of equity. Very interestingly, some banks have zero HTM losses, such as Capital One, TD Bank, and Fifth Third, along with American Express. Although they may not have hold-to-maturity losses, they have available for sale losses, which is basically the bank saying that they are actively looking to sell these assets rather than hold-to-maturity. Although we are becoming a little numb to these high hold-to-maturity losses, keep in mind that 9.5% hold-to-maturity loss relative to equity was enough to take down Signature Bank. What really caused Signature Bank to fail was their deposit base, which was 89% uninsured. The combination of hold-to-maturity losses and a high base of uninsured depositors is the typical recipe for a bank run and subsequent failure. Now, when we look at these hold-to-maturity losses combined with our scan of banks with high uninsured deposit bases, we can see that some firms may be in serious danger of going under based on meeting both of these two very detrimental criterias. This is just my personal opinion and not financial advice, so do your own research in D&D, but I have picked out a couple banks that I believe could be at serious risk of failure given what has happened with Signature Bank and Silicon Valley Bank and what has led them to fail. When I look at Bank of New York Mellon, they have 23% of their equity in hold-to-maturity losses. So that is hold-to-maturity losses making up 23% of their equity. And if you added in their available for sale losses, it would nearly double that number. But for this exercise, I'll just focus on hold-to-maturity losses. The scariest part about this is 96% of their deposit base is uninsured. If those depositors don't feel safe, given they won't be covered by the FDIC traditionally, they may start to demand their money, which is the definition of a bank run because given their losses, they may have trouble paying them. And to move on to another bank, Northern TC has hold-to-maturity losses that are 20% of equity and a deposit base which is 83% uninsured. To move on to Citibank, they have hold-to-maturity losses that are 15% of equity, but a deposit base which is 77% uninsured. And then First Republic has hold-to-maturity losses that are 27% of equity, but the deposit base is 67% uninsured. And then Huntington Bank has hold-to-maturity losses that are 13.5% of equity, and 55% of their deposit base is uninsured. Fresh news came out today that UBS is buying Credit Suisse, which is a good sign for the markets for sure, but it doesn't solve the underlying problem, which is many banks bought long-dated U.S. securities, treasuries to be specific, in 2020 once there was an influx of cash due to free money policies and low rates. Now that rates have risen over 800% when you look at the 10-year, since 2020, it's causing massive losses within the bond portfolio. If you think I may be missing something here, please, as always, let me know in the comments. I'm always happy to talk back and forth with all you folks. A lot of smart people watch videos like this. So please leave a like and subscribe to the channel if you enjoyed this video. If you would like to see my daily portfolio moves, my exits, my entries, you can join the Discord, which is linked below. Also, I have a free daily newsletter. You can sign up at opportunistictrades.com if you're interested. With that being said, happy trading, everyone. Good luck. Stay safe out there. Peace.